What is going on, Lucid fans? Welcome back to Financial Journey. So yeah, we got an interesting one today, that's for sure. But I think we kind of all deep down knew that it wasn't going to be necessarily the best. So I'm going to go over all the things that you need to know what came from the earnings. If you're just watching this for the first time, it's going to be chaptered at the very bottom, so you can just skip ahead if you want to, Peter, Sherry, and so forth. But I'll give you a good Cole's note. So the 2023 Q1 earnings did come out. Revenue was a little bit lower than the forecast, so 149.4 million. So that is a little bit lower. So based on, for instance, the revenue from analysts, there was around 7 analysts, and the consensus was 209.88 million. So a little bit lower, a lot lower. But of course, they are comparing it to the previous quarter, increase of 159%. So I guess there's always different ways to interpret that, glass half full kind of scenarios. So in comparison to last quarter, which wasn't much by any means, it was a big increase, but definitely that's a lot lower. As far as manufacturing, so it's set to be between 10 to 14,000 for vehicles. They did say that they're going to be manufacturing more than 10,000, but ever since they came out with their numbers, I think that's kind of very telling that they were going to. Based in the Q4, they said that Q1 was going to be the worst of all the earnings. Especially a little bit more of a slower, and I think they blamed it on supply chain. So going into the earnings as well, that'll be something to really watch for. The fact that they've confirmed that they're going to start doing international deliveries. The fact that they hopefully don't use the word supply chain at all. It does look like they started the stealth, so that was one of the supply constraints, so that's clearly a good sign. The second one is the pure. So the pure is definitely going to be another big one. Earnings per share was a little bit lower as well. I don't think this report does technically have it here, so I'll find that quickly. I believe it was negative 43 cents compared to the estimate for earnings per share, which was negative 41 cents, which similarly there was 7 estimates done by that. I don't know why the revenue is as low as it is, especially like it previously 3 months ago was 320. They clearly came up with their delivery numbers. That is where it was lowered down to roughly around 209 million. But the fact that it came in at 149.4, that's like, I know they would have focused quite a lot on Formula E, and then they would have had the tentative Q1 deliveries, but I don't know why. But overall, I'll give you guys a good overview. It is currently down 9.34%, and based on my previous early video this morning, that is exactly what you want to watch for, this S1. So most likely I do anticipate this holding, unless there's something detrimental that Peter or Sherry does say during the actual call. And I think they will be forced to answer some difficult questions. Because in the past they've kind of had some neutral questions, but it looks like a lot of the questions that is being brought forward by retail is very, very good, on point this quarter. So first one is as far as under promise, over deliver, just straight up using Peter's words against him just to see. Then here is the next 2 questions. So one of which is the midsize SUV, and then the Gravity. Not to always play that card being optimistic, but I do truly feel that this is the last bad earnings, especially based on the Q4 transcripts. Like they pretty much laid out exactly their plan for Q1, 2, 3, and 4. And Q1, I think they already knew it was a little bit lower, probably a little bit, I don't know. On a side note, when this does start up, the actual earnings call, this is where I'll mute myself, and then tentatively, yeah, we'll just listen in. So it is set for, I think, 4:30. Music just stopped for some reason though. After hours dropped. Yep. It's weird to not have background music anymore. Wasn't that good at background music, on a side note. But yeah, based on the technicals, I think they weren't really looking that good in general. But I think it's just, yeah, not much to really say, to be honest. I think this is kind of expected. It won't be that big of a surprise. The only thing that actually threw me off, to be fully honest, was the fact that normally they have a big catalyst at least a couple of weeks prior that they like to unveil. That's something that Lucid is very typically likes to do, whether it be the Sapphire. They like to give a little bit more of teasers before that, and then they do the big unveiling, obviously, as an event afterwards. I would have really figured that the Gravity, unless the whole PR about Gravity being tested, that was something. I don't know. But what I'll do is I'll just refresh this. Okay, yeah, I think they just stopped the background music. Okay, so I'll give you guys a quick overview of that. I think, yeah, we have all the necessary numbers we have for the actual earnings. We just have to wait till find out the data now. So shorts increased about 1.34 million shares today. I don't know why, just something. I see a lot of these stocks, like growth stocks in a similar circumstance to Lucid, all have had their short interest, and shorts kind of got out of them, with the exception of Lucid. I don't know why. Maybe it's just starting to bother me right now. But with the numbers coming out, it'll be good to see kind of as far as Lucid's multiples. So currently, the PS is at 23. Very, that's crazy low. Future is 10.4. So with the new numbers out there, we'll kind of, once this updates, we'll see exactly what that works out to be. But in comparison, generally, Lucid was at a pretty good discount compared to everything else. So 8.69% down a little bit. Not much activity. Like I said, I might be a little bit more premature in saying this, but I feel that this is going to be bought up very, very fast. Because deep down, I think the institutions truly know that the economy is wanting, and there's a lot of good momentum. So it can definitely push higher, and with Lucid, it can definitely do that as well. Just kind of follow and piggyback off of that. So even though it's not the best earnings, I think people know it's expected. One of the last bad earnings, and just the economy seems to want to break out. So this is going to get bought up very fast, unless they bring up something negative. But in case you guys are just joining, 149.4 million for revenue. Yeah, we're on track to produce 10,000 vehicles in 2023. The company-wide initiative ongoing will be enabled Lucid to pivot to higher volumes as market conditions allow. It's not necessarily the best wording, but as long as we deep down get some true good answers from Lucid. And for those of you that have been in Lucid for a while, you guys know what I mean by that. No tiptoeing around, no, just straight up answers. I think that's what's more advantageous. And so this is a good breakdown as well. So earnings per share came in at negative 43 cents versus the forecast, which is shown right here, negative 41 cents based on 7 analysts. So the only thing that I can assume why it's a little bit lower for earnings per share, maybe near the end of the quarter when they're kind of reviewing a lot of their numbers, that's when they kind of realized that they needed to lay off some staff. So maybe that's why. Because, yeah, I think the true number wasn't 18%. I think it was around 15.5%, based on some article. So I don't think they laid off as much as they were assuming they were going to. But they did lay off my favorite employee, Jeff Curry. So that's kind of sad to see. Glad to see everyone come out. I appreciate you guys. Let's go Lucid. Bill, Sarge, welcome. Tristan, I completely agree. I don't know why, just something about Lucid, like deep down, I know it's been just suppressed for too long. Some of which is their own doing because they're a newer company. I think people started to ease off a little bit over the last quarter on Lucid, and this is why it's kind of been stabilizing and not really selling off. Just I don't know. Yeah, not much action. So 8.82%. In case you guys are just joining, some numbers. So kind of a double miss right now. We're just finding out eventually in around 30 minutes what the actual true numbers are. But keep in mind, like the reason why we invest in, for instance, EVs is it's going to be the next big thing. And I think this news came out a couple days back. So new homes, and I can see this easily expanding very fast, just having the capability to handle EV charging. So I feel just this is a very good indication, the fact that EVs are the future. Everyone knows that, especially having Saudi Arabia behind us and backing us. They, in among themselves, have like a little bubble that they are going to flourish. Like their infrastructure within just Saudi Arabia alone, like Lucid could survive just there. Like same thing as what Tristan said though. Like it just doesn't make sense how everything that if you lay down what Lucid does offer and what's backing it, like there's no real good excuse. But I think, like I said, these questions that's being posed by retail, so by Paul 𝗖𝗢𝗡𝗘𝗧, I think he's actually 3 questions. 𝗖𝗢𝗡𝗧 is definitely on the ball there, but a lot of good questions in reality. So yeah, first one, just getting Peter to kind of elaborate on his whole point about under promise, over deliver. 50,000 SUV Gravity, as far as additional trims, and hopefully they'll talk on the Gravity. Well, they will talk on the Gravity. They'll want to try and deter any negative sentiment and kind of focus on a short-term catalyst, so that'll be Gravity. This one's also a good one. I don't know if they would answer this because this one is kind of interesting. And oddly, even though we did hear from him, what was his name again? I'm going to pull up that article. Ever since this came out, I really like the guy, just straight up. Because I really like 𝗖𝗓𝗏. Like, I like how he explains things. And I've got more out of 𝗖𝗓𝗏 than like any PR. And this guy, Mike Cruz, I like the fact that he outright just says that there is demand things, but they're here to stay. So it's kind of, it's honest, but yeah, it's dedicated, and it shows that Lucid is going to be a big force to be reckoned with. So I don't know, I haven't really seen or heard anything else from this Mike guy, but I think Lucid is getting a good team together now, the A team. And yeah, so a point to watch for, especially during the call, is going to be $6.96. So that's a very big support. You'll want to kind of watch it, do that. While the earnings are going, I'm going to mute myself. We'll just kind of listen in on that. I'm going to mute myself, like I said, and I'll just kind of cycle between short information, see what they're doing periodically, and just the charting. Barry, yeah, not surprising. Oh, Barry, I hope not. Yeah, I really hope they don't delay the Gravity. Mark, new EV producer in a bear market. The thing is, Mark, a lot of EVs right now are getting pretty good results. It'll be interesting as well because Rivian's earnings are tomorrow. A lot of people like to consider Lucid and Rivian on the same tier for the most part, both starting at the exact same time. So it'll be interesting to see their results as well. Exactly. Let's go Lucid. The thing is, even myself, I was really watching Lucid stock price, especially while doing videos, and I feel like I've kind of chilled out with Lucid. Like, there's not really, like, we know, like, every stat out there does show that EVs are moving in the right direction. Lucid is going to get a good piece of the pie potentially of that, for the whole demand. Just, it needs to find its groove. Companies take a while to do that sometimes. A mod? Yeah, you know what? Well, I guess it's kind of good based on how Lucid was. I did sell some 850 covered calls 2 weeks back. So all of my stuff, I'm gonna get that locked in for additional premium. But yeah, most likely I'll buy some additional, especially if it does, for instance, stay in the sixes. I'll definitely increase my position for that. Creston. So some of the questions are, number one, so typically they ask 3. I think in Q2 2022 they kind of felt bad. They asked 5. But in this, first one is, Peter, you have said, I like to underpromise and I like to over-deliver, but yet promised 20,000 in 2022, 49 in 2023, got 4,000 in 2022, and guidance of 10 to 14 in 2023. So clearly not following his kind of wording there. So when will you see under promising and over delivering? That one's kind of a low jab to Peter, but I think it's one of those things that needs to be done. They need to realize that right now, especially with the peer, like the peer does have almost no reason not to do good. Like, I know they're not disclosing reservations anymore, but ever since, like, throughout 2022, they said, I think roughly around 70% of all the reservations, which last now that we knew was 28,000, I think, majority of which were the peer. So the peer is definitely, they have no real reason to stick within that guidelines. But second one, we are almost 2 years from 2025. When should we hear about the midsize SUV? That one's definitely a good one. But as what Barry did say, hopefully they do not push back the Gravity by any means, because if they push that back, I can anticipate this getting pushed back, the midsize SUV as well. Third question, would you consider launching the Gravity with more price accessible trims to attract more buyers? So that's also something I'm really curious about, is the initial price point of the Gravity as well. And then obviously they can elaborate on the additional trims and so forth. This one's a tough one. I want to know the answer. I don't think they'll answer it, but given the lower than expected demand for the Lucid Air, is there any new plans to improve Lucid's marketing strategy and brand awareness? That one is definitely good. And I don't think they ended up getting that Newcastle deal. I think that was kind of the rumor that's floating around, that they were going to get pay, I think, $3 million or something like that, or it might be higher, but for it to be a sponsor on Newcastle's jersey. I don't think that worked out. But why is your salary so high when your production is so low? This one is actually a new one. When I was going through it, I think this must have creeped up. But yeah, this one's a tough one. I don't know if they'll answer that. Why is your salary so high when your production is so low? Yeah, that one's, like, I feel like that would be a fair question to ask. But based on the recent shareholder meeting as well, they did really point out the fact that their bonuses are now even more heavily dependent on results. So they did even say that in 2022, none of the VPs got any bonuses. So I don't know. That might be their answer. If they just say, well, you know what, we're adjusting. I don't know. It's a good question, though. When do you expect to achieve a positive free cash flow? This one they won't answer because they won't know, unfortunately. Good question, though, but they won't have the expertise to know. But again, I don't think they'll go this low as far as questions. Typically, it's just the top 3 or top 4 potentially. But if they do skip down a little bit more, then there's a lot of good questions. I'm surprised ESS people, because I think they were assuming by 2030 that there's going to be, ESS was going to bring at least 200 million in revenue for Lucid. Surprised people haven't really pushed for more questions on that. But again, if you guys are just joining, as far as a quick summary, it was a double miss on earnings. So missed on earnings per share, revenue. I don't know for the life of me how it could be that low. because they would have really pushed for Formula E, so they would have had a lot of revenue generated from that. And as far as I know, I don't think they submitted it yet. SEC filings. Oh yeah, no. Oh, that was 1 minute ago. Sweet. Okay, let's pull this up. Michael, hey, EV is inflated. Yeah, Barry. Well, I don't know if they would bring up the Saudi deliveries yet, because they kind of said that it would be in Q2. Yeah, Michael, their bonuses. Yeah. I think that would be pretty cool if they actually answered it. Why is your salary so high, but yet you're not producing? Yeah, why is your salary so high when your production is so low? You know what? That was one of the things that was circulating, I think, at the early part of 2022. The fact that I think Peter was it the second or third most heavily paid CEO? I don't know. Like that one. Good question though. And in case you guys are just joining, I'm going to mute myself during the actual live stream. I did start a little bit early. It starts in about 20 minutes, give or take. We'll listen in and we'll see exactly what is said, and then I'll give you my little version of my interpretation of that. We'll see what you guys are thinking. But let's get right to this. Okay, frequently asked used terms, don't need that. Okay, so cash and cash equivalents. Okay, that's definitely so. I noticed on Lucid's PR, so this is actual Lucid PR right here, but they didn't actually talk on, not to say that I'm right, but ever since Sherry, who is the CFO, I believe, she's said many times the fact that there's sufficient cash for, yeah, actually, no, she did reiterate with 4.1 billion in liquidity, which ended and should be good for the second quarter of 2024. So she pushed it back to second Q2. Previously, it was Q1 2024, but yet based on this, short-term investments, I'll have to look exactly. That's liquidity has dropped quite a lot. I was under the impression that most likely they'd need to dilute in Q3, but of course I think that would be needed, and maybe the PIF in among itself would increase their position. Quite a lot of inventory. We'll see what that kind of alludes to. Yeah, Rev. Ooh. Cost of revenue has gone up on a percentage basis, but they did say in Q4 that the margins were going to be bigger. Right here. Right here. Impact on margins in Q1. So they kind of already tentatively knew it wasn't going to be the best earnings. And 9.21%. So I have a feeling it is going to stay above this S1, so 696. And probably after the conference call, after they talk on the gravity, it should get bought up. But fishing for you, they shipped hundreds of vehicles with partial covers in April. Yep, Barry. Yeah, it was supposed to be Q2. Well, we're still technically in Q2, technically. Yeah, Mar. Yeah, 2:30. So in about 15 minutes. You mentioned before on their website. Sorry, I'm just taking a look at the chat. RJ, you are amazing. Appreciate that. Alan, I wouldn't say that, because the market is going to, I don't know. I don't think it'll go down that low at all. Yeah, this one, I'll go through it and I'll do a dedicated video because there's some things. But yeah, if they're saying Q2 2024, that's definitely based on how much they're burning through. I don't think that would be sufficient. And now I've learned as well, especially with Lucid, you have to read every finite little word. They seem to sneak little Easter eggs in here sometimes. But I'll do a dedicated video on that as well. So currently, yeah, down 9.08%. As far as, in case you guys are just joining, right here. Okay, so that's the tentative results. Let's actually go back here though. Let's okay. Okay, so vehicle sales generated. Let's see. Actually, you know what? In here, let's see if we can skip ahead on what they're going to say. Okay, so Barry, we expect to begin production of the Gravity SUV in 2024. After the Gravity, we'll plan on to leverage and expand our technological and manufacturing advancements to develop and manufacture progressively higher volume vehicle segments. So maybe that is that other trims potentially, or I don't know. But yeah, so it looks like Gravity is still in play, guys, and that's definitely a good sign. Didn't get pushed back. Sarge, I am investing for the long term with Lucid. I've kind of learned to take a step back, chill out with it. Maybe, I don't know. They are moving in the right direction. So for those of you that actually have gone on Lucid's website, they have actually improved it. So again, if you guys are on here, they've made things a lot, it's kind of still room for improvement, but it's definitely a lot better than what it was. And one thing, especially from a creator standpoint, what always bothered me was the fact that they did not update their events. So whoever was kind of in charge of this, just even though they had a lot of things that they did, they just weren't updating their events, upcoming events, previous events, like nothing happened. But now they're really on top of it. So they are moving in the right direction. Even based on, the Q4 earnings, this was projected. This is where they've laid out everything. Q2, they'll be ramping up on shipments to the Middle East and Europe, so we can expect total deliveries to increase in Q2. So hopefully that should get rid of that gap. Q3, they're going to be activating parts of phase 2 at the AMP1, and so there's going to be transitional downtime in between, and Q4 phase 2 we'll expect. So we'll kind of listen into the earnings call to see if they do say this exact same thing or what they potentially change. But yeah, they've mentioned twice just in this 1 minute kind of talking point that they were on, lower volumes in Q1. So they didn't really have that much high expectations. And yeah, it looks like it's going to stay in the 7s most likely. And I'm listening to this. They don't change the music at all, on a side note. Let's see. Based on the bid and the ask, a lot of big money is buying. So that's a positive thing. 4.5. So a lot of big money is getting in. Going back over here though. So what stands out to you guys as far as earnings? Fishing for you. Can I see Rivian being pulled down by Lucid? Honestly, yes. Vice versa. Depends on the way I see it. It's not always right, but Tesla usually does dictate where the other EVs go. Good, bad, and the ugly. And whatever happens to, for instance, Rivian or vice versa Lucid will affect those. Won't really affect going up. So that's kind of the chain of command as of right now, if you want to play it like that. So yes, if Lucid's, actually I haven't even looked, let's see. Rivian right now is down 1.37%. So it's clearly not to the same magnitude, but right now Lucid hasn't really talked on a lot of things. So we'll wait for the conference call, but that might affect Rivian a little bit more. But Rivian had a pretty good day. To be honest, Lucid actually had a pretty good day too. It went down to 726 and got bought up very, very fast. So I feel that that is going to happen as well after hours. Bill, 5 would be a problem. Some funds can't hold penny stocks below 5. Yep, Bill, that is 100% the penny stock kind of rule. Even though it doesn't make sense, any stocks. So that might be something that there is a special shareholder meeting for, just to approve a, I think what they always use the word, on an advisory basis, a reverse split. So you might get that notice potentially soon. I feel like getting for it to get to 5, that's a little bit far-fetched right now, given the nature, especially considering based on the earnings, it should only go up from here. But let's say the economy does get worse, the debt ceiling doesn't kind of get extended, and CPI shows inflation is massive, then yeah, if it goes down to 5, then they would have to do a reverse split. To a typical company, yeah, it's not that big of a deal, because yeah, it's small fish for a lot of people. But for instance, in Lucid, these are the institutions that are holding Lucid as of right now. And of course, the PIF, Vanguard, BlackRock. The thing is, when it comes down to the penny stock rule, it's just companies that are holding it on margin. They cannot lend it out. I believe in certain accounts, can't hold it in trust accounts. And I think there's 1 or 2 more things, but yeah, if it does break below that $5 mark, some, not all, would have to tentatively sell out. But I think it's a little bit more premature to talk on at this stage. But it's good to know. Good to know, though. I honestly, given the nature, even factoring in maybe dilution in Q3, I don't see us getting to 5. We're going to hold pretty good support right now. And even myself, the account I have, I recently switched accounts, and unfortunately I don't have after hours with that, so I'll have to wait till tomorrow. So I'll buy for sure tomorrow. And then plus, yeah, volatility and options are best friends to each other. So the more volatility, the more you can easily make with options. So highly recommend you guys researching that. But again, if you guys are just joining, double miss, earnings per share, revenue, both down. Revenue, we'll find out exactly what they say and is attributed to that, because in Q3, right here, they did have delivered 1,406 vehicles, but yet they produced 2,300. So that's something they'll have to bring up. I don't like this quote by Peter, where it says we are on track to produce over 10,000 vehicles, which I think that's kind of a given, in 2023, with company-wide initiatives ongoing that will enable Lucid to pivot to higher volumes as market conditions allow. I do not like this, market conditions, because, for instance, Polestar, they have their earnings on Wednesday morning. Rivian, a lot of those have announced their numbers prematurely than their actual earnings, and they didn't really have that big of a problem that Lucid is having. So the fact that he's talking on market conditions, I don't like that. And that seemed to have been his favorite thing. He was talking market conditions quite a lot in Q4. So we'll see what Peter has to say. A lot of tough questions for him to ask as well from retail. I'll do a dedicated video once I have time to go through all this, the actual true earnings. But Gravity does appear that it is still on schedule. So it says we expect to begin production of the Lucid Gravity SUV in 2024. As far as I know, I think it was in Q2, if I remember correctly. Actually, let me just double check. Gravity, nope. Okay. Doesn't say exactly what quarter. Just on track for 2024. Nope, doesn't say. Yeah, as far as I remember, I think it's just first half of 2024. But we'll find out, because this is the time that they'd have to give notice. And let me just throw up a quick poll just to get you guys' thoughts and opinions on what's going on. There you go. What do you guys think? Is this the last bad earnings for Lucid, for instance? I think they will. I don't know if all I saw is James say the PIF won't allow that. If someone's talking about bankruptcy, oh, Marv, could Lucid go bankrupt as suggested by another guy on YouTube? Don't trust a lot of people on YouTube, including myself, especially myself. I'm just kidding. But no, theoretically, any company could go bankrupt, but especially that Lucid is part of the whole 2030 vision, the PIF has got them pretty back, like good secured. So let's say worst case scenario, Lucid goes into a little bit more of a recession, or the market goes into a little bit more of a recession. Lucid's demand does drop. Well, then all they'd have to do is just lay off more staff, kind of cut as much unnecessary expenses as possible, and they'd be able to survive. Like, even with dilution and how much they have on hand, and like in theory, I can easily see them, if they even fail up until, let's say, continuously up until around 2026. I could see if they haven't got their stuff together by 2026, this is where it is very feasible. Maybe they kind of get into some very serious trouble, but that's assuming that they don't get their stuff together by 2026. That's very far-fetched. I think in reality, like I said, this is most likely going to be the last bad earnings. And even what they indicated in Q4 earnings, probably what they'll say as well in this, things should get better from here. That was long-worded things. Black Adler, yes. Mass production is definitely hard. So I think Lucid will have to find a happy medium eventually on what they want to accomplish. Because I think right now they got very excited. They have this amazing technology, but they are still considered a luxury brand. So mass producing a low quality vehicle, or a lower quality vehicle, I guess, is very acceptable, but it takes time for the air, and sometimes I think they've learned their lesson. Potentially, if there is demand problems and they overproduced on one vehicle, I think they learned their lesson. So I think they're learning from their mistakes. 4 minutes left, ladies and gentlemen. What about the Saudi buyout rumor delivered to Saudi Arabia? Yeah, that's been, realistically, they could. Like, there's a lot of things in favor of both yes and no that the takeover would be done. Because coming from a business standpoint, instead of, let's say, the PIF doesn't like some certain aspects on what Lucid is doing, they can easily just do what they will. But there's also a benefit for Lucid being and staying as a American company, because even though on, like, being an American company, it's whatever, but it does hold a lot of good kind of power just in among itself. So sometimes it might be beneficial to be the majority stakeholder behind the scenes, controlling power, of course. And so I don't think the PIF will ever fully take Lucid private. They will increase their position. For instance, even in Q3, they'll probably easily increase their position, but whether they take it over, I don't see it possible or realistic. Jahind, you're asking the $1 million question. Is it better to kind of swing trade or to hold long term? If you're good at technical analysis, then yeah, you can easily flip this. Especially right now, it's just been wedge bound and trading kind of within kind of the fib levels, so it's very kind of predictable for Lucid right now. So if you're good at that, yeah, you can easily trade, make some quick swing trades over like a couple weeks. But I think Lucid has that little X factor that a lot of people know that it's at a discount, and all it'll take is just one good thing for it to go up. So yeah, especially when this whole PIF rumor came out, like look how high it went. Imagine if you were kind of like swing trading and you got out right here anticipating it's going to go down. Well, guess what? You would have missed out on a lot. This is why I prefer, my own opinion of course, I prefer to physically hold the stock and just trade through options. Some little bit more of a side note in case you guys are curious or interested. Linda, yes, actually someone emailed me a something to bring up. Let's see. He emailed me this asking if I could put this on and kind of review it on the channel. And you know, I absolutely love predictions. This one is 2023 onward, so all the way to 2060. And I looked at the early part, and this is kind of realistic, especially when I open it and I see, like, for instance, 2023, or like, let's say, I don't know, like 2024 being $500, like it kind of loses credibility. But 2023 57, you know, it could, it very, very well could. But yeah, I saw some good price predictions based on that. Okay, so it's starting in a couple of minutes. I have all this in the background, so I'll mute myself once they come on, and then we just listen to Peter, Sherry, and so forth speak. I will be flipping back and forth between just the price. That way you can see whatever is said, for instance, during the call, what the market likes, what it doesn't like, whatever it is. But based on how it is, I don't see it breaking past this 696. So just be aware of that, 696. And nope. Yes.
Hello, and thank you for standing by, and welcome to Lucid Group's first quarter 23 earnings conference call. At this time, all participants are on a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask the question during this time, you will need to press star 11 on your telephone. You will then hear an automated message advising your hand is raised. To withdraw your question, please press star 11 again. I would now like to hand the conference over to 𝗪𝗓𝗓. You may begin.
Thank you, and welcome to Lucid Group's first quarter 2023 earnings call. Joining me today are Peter Rawlinson, our CEO and CTO, and Sherry House, our CFO. Before handing the call over to Peter, let me remind you that some of the statements on this call include forward-looking statements under federal securities law. These include, without limitation, statements regarding the future financial performance of the company, production and delivery volumes, financial and operating outlook and guidance, macroeconomic and industry trends, company initiatives, and other future events. These statements are based on predictions and expectations as of today, and actual events or results may differ due to a number of risks and uncertainties. We refer you to the cautionary language and the risk factors in our most recent filings with the SEC and the forward-looking statements on page 2 of our investor deck, available on the investor relations section of our website at ir.lucidmotors.com. In addition, management will make reference to non-GAAP financial measures during this call. A discussion of why we use non-GAAP financial measures and information regarding reconciliation of our GAAP versus non-GAAP results is available in our earnings press release issued earlier this afternoon, as well as in the investor deck. With that, I'd like to turn the call over to Lucid's CEO and CTO, Peter Rawlinson. Peter, please go ahead.
Thank you, Maynard, and thank you everyone for joining us for our first quarter earnings call. In quarter one, we produced 2,314 vehicles and delivered 1,406. Now, Sherry will go into more detail on our financials, but I would like to first thank all our employees. We have the best EV on the market, and really, I believe, the best car on the market. And it would not have been possible without the collective efforts of our entire team, which is a direct result of tremendous perseverance, resourcefulness, and teamwork. I want to express my deep personal gratitude to everyone who has contributed to and the teams that will help advance our mission going forward. I'm very excited about our future and the opportunities that lie ahead of us. We have the best EV on the market and really, I believe, the best car on the market. And it would not have been possible without the collective efforts of the entire team. I would like to welcome 3 new members of the board, 𝗪𝗓𝗓𝗏, Shabi Nouri, and 𝗪𝗓𝗓𝗏𝗓𝗓. Together, they bring significant global experience in the areas of marketing, finance and operations across automotive, technology, and luxury consumer goods. Now, these additions are a reflection of the company's evolution as we mature to the growth and brand awareness stage of our life cycle. I'd also like to congratulate 𝗪𝗓𝗓𝗏𝗧𝗧 on his appointment as Lucid's chairman of the board, and also thank Andrew Liveris for his guidance during his service as chairman. And also a heartfelt thank you to our outgoing board members, Nancy Joyer, Tony Posawatz, and Frank Lindenberg, for their significant contributions and their dedication to Lucid's mission. Now, last quarter, I laid out 2 key significant strategic priorities for the company. Number 1, growth and brand awareness. And number 2, a laser focus upon cost. We have taken immediate action on both. We made the decision to adjust our workforce in Q1, given evolving business needs, productivity improvements, and broader economic uncertainty, which we, like many others, are not immune from. Whilst we believe this positions us to be more agile and puts us in the best position for success moving forward, it was nonetheless a difficult decision. Sherry will speak to our cost focus in greater depth. So let me provide an update on our growth and brand awareness progress. Now, we continue to make strides in growing our brand awareness, and I'm proud to say that Lucid Air was recently awarded a number of prestigious industry accolades, adding to our existing portfolio of awards, such as the 2022 Motor Trend Car of the Year. At the 2023 New York International Auto Show, Lucid Air was crowned the 2023 World Luxury Car. Lucid Air was also named to be the US News and World Report 2023 Best Hybrid and Electric Cars lists for Best Luxury Electric Car. Now, these awards reinforce our belief that the Lucid Air is not just the best EV in the world, but the best car available in the world today. The Lucid Air set a new industry benchmark for range and 2 versions that were the first EVs to achieve an EPA estimated range over 500 miles. And we set these new standards thanks in part to our groundbreaking in-house developed technology, which continues to garner significant industry attention. In fact, Lucid recently received the 2023 Newsweek Powertrain Disruptor of the Year award. I cannot underscore enough how advanced our technology is, making it the best in the world on many metrics. I believe that we are years ahead of our next closest competitor, who, in turn, we believe is several years ahead of their next closest competitor. I believe that as more companies come to the realization that developing world-class powertrains is not as easy as we make it look, then we will continue to grow more interest in our patented hardware and software technology from other OEMs. And in fact, we continue to see interest from multiple parties. As I've said in the past, whilst this is not an area where we've put a tremendous amount of proactive attention, I'm pleased with the growing levels of interest and progress that we're receiving with these OEMs. So our technology and know-how is what enables us to have game-changing range, supercar levels of performance, super fast charging, a luxurious and spacious interior, and exceptional aerodynamics. But I also want to stress that the best technology does not mean most complex nor most expensive. In fact, it's quite the opposite. I believe that our vehicles are fundamentally easier to manufacture in many ways than our competitors. And this is done through brilliant in-house engineering, a design for manufacture, and very high degrees of innovation. And we're not resting on our laurels. We're using advanced technology to drive down the costs for EVs. We're moving towards more efficient EVs in order to decrease the battery pack sizes, which will enable lower cost vehicles. And we have much more to come with an exceptional technology roadmap and further enhancements and innovations, pushing the envelope on what's possible, including for our mid-size platform. Now, looking more near-term, Sapphire is on track for start of production later this summer in mid-September. The Lucid Air Sapphire will feature 3 motors, carbon ceramic brakes, an aerodynamic package, new sports seats, and track-tuned suspension for a sublime driver-focused sporting experience. It's expected to boast a sub 2 seconds 0 to 60 miles an hour and a sub 4 seconds 0 to 100 miles an hour, with a sub 9 seconds quarter mile and a top speed exceeding 200 miles an hour. I've been test driving Sapphire very recently, and I'm finding it extremely satisfactory in terms of its performance. I'm also excited to announce that the Gravity SUV entered a new phase of development, with road testing having started a couple of weeks ago. Just as the Lucid Air redefined the sedan category, I believe that the Gravity SUV is positioned to do exactly the same for its corresponding SUV category. Indeed, we're taking all the best elements of Air and putting them into an SUV. Game-changing range and efficiency, amazing interior space, fast charging performance, and luxury. Just last week, I was out in a Gravity on a test drive, and I'm delighted with the progress that has been made. Make no mistake, the Gravity SUV will be a true landmark. And we can't wait for you to experience the Gravity SUV at an unveil later this year, at which time you'll be able to place a reservation. We think you're going to absolutely love it. Now, in software, we continue to make big strides. We had 5 over-the-air updates in Q1, with a number of features that customers have been requesting, including CarPlay and scheduled charging. And indeed, we're working on many more exciting updates. We're listening intently to what our customers want, while simultaneously providing more in-house design features to provide our customers with whatever best-in-class experience they prefer. Now, what's more important is to emphasize that we've designed our cars to be over-the-air updatable from the very start. And I believe that there are very few that have the over-the-air capability to the same degree. It's a platform on which we can do so much more. At our last earnings call in February, I spoke about customer awareness of the Lucid brand. We see brand growth happening in stages, starting with the innovators, then early adopters, and moving to early majority and beyond. We believe we are still early on in our customer growth stage of innovators and early adopters. And as we achieve a tipping point in brand visibility, once enough cars are on the road, we will believe we will see a higher velocity of growth. And we've continued to take serious action and a holistic, data-driven approach to our marketing programs focused on qualified awareness, digital conversion, test drive experiences, and conversion to orders and deliveries. And we're seeing some early wins. The number of test drives has nearly doubled in the first quarter from the fourth quarter of last year. I believe that seeing is believing, and once you experience the handling, the quality, the performance, and the interior space of Lucid Air for yourself, you'll understand the award-winning nature of our vehicles. We see test drives as the key stepping stone for customers considering the purchase of a Lucid Air. We launched our Dream Ahead tour last month, which is designed to showcase the Lucid Air's game-changing electric vehicle performance and technology. Consumers will have the opportunity to experience and drive our 3 Lucid Air models, the Lucid Air Pure, the Lucid Air Touring, and Grand Touring. And they'll do that in 42 key cities right across the USA. Now, in fact, the White House promoted our Dream Ahead tour as part of President Biden's EV acceleration challenge, highlighting actions to encourage EV deployment. I'm also delighted to announce that Andrea Soriani recently joined Lucid as our new head of marketing. Now, Andrea brings over 25 years of experience in luxury brands and automotive, having worked at companies such as Maserati, Ferrari, and Tag Heuer. And we certainly expect the Lucid Air Sapphire and the Gravity SUV to further elevate awareness of the Lucid brand. There are many more grassroots efforts underway, capitalizing upon our incredibly passionate customers who are also our biggest advocates. Now, there's a misconception out there that Lucid Air's starting price is far higher than it actually is. Many people out there really believe that the Lucid Air is a $200,000 car, when the fact is that the starting price for a Lucid Air Pure is $87,400, which we believe is a truly compelling offering in the marketplace today. And we're working on ways to achieve broader access. We started deliveries of the Lucid Airs with stealth appearance last month, and will deliver more Lucid Air Dream and Grand Tourings this quarter to customers in the EU and in Saudi Arabia. We've resolved some of the gating items and will continue to focus on ramping up production of the stealth appearance and components for international shipments in the second quarter. We expect the Lucid Air Pure volumes in the back half to also ramp with the start of the Lucid Air Pure rear-wheel drive in North America. We're on track to produce over 10,000 vehicles in 2023, with company-wide initiatives ongoing that will enable higher volumes as market conditions allow, and Sherry will go through guidance in greater detail. So in closing, we recognize that we have more work to do, but we're making progress with our strategic priorities, and the team is totally energized. Our mission and our optimism are unchanged. We're committed to a more innovative and environmentally sustainable future, designing, building, and delivering the best EVs on the market as we expand globally and develop more exceptional vehicles such as the Gravity SUV, which we plan to launch in 2024. I am confident that we have the most advanced technology, we have the right operational infrastructure, and the know-how to deliver. And we have a track record of tenacity that will make us stronger. And so with that, let me turn over to Sherry for an update on our financials. Sherry.
Thank you, Peter. And thank you to those who are taking the time to join us today. I'd like to begin by calling out a few recent highlights. Last month, we announced that Lucid joined the United Nations Global Compact, the world's largest corporate initiative advancing sustainable and socially responsible business practices. Sustainability is an integral part of what we do every day. It's our mission, and we view this as a natural progression in our sustainability journey as a company. Last month, we also signed the first annual agreement with the Human Resources Development Fund, or HRDF, in Saudi Arabia. This agreement operationalizes the Memorandum of Understanding signed with the HRDF in October 2022 and will facilitate Lucid training programs and will fund skills development and salaries for Saudi nationals who work within our organizations within Saudi Arabia. The Public Investment Fund has connected us to many of the ministries throughout Saudi Arabia, and this HRDF agreement is another example of how those relationships and partnerships have resulted in significant economic and administrative support as we launch our international operations in the Middle East. The PIF has been a committed investor and a strategic partner for many years, and we're very grateful for their partnership and support. I'd also on the SEC investigation that was previously disclosed on December 6, 2021. On April 27, 2023, SEC staff informed Lucid that the SEC concluded their investigation related to the business combination between Churchill Capital Corporation 4, which was Lucid's legal predecessor, and 𝗖𝗢𝗡𝗡𝗘𝗖𝗧, Inc., in certain projections and statements. I'm pleased to inform you that they do not intend to recommend an enforcement action by the SEC against the company, which we view as a very positive outcome. We consider this matter closed. I also want to talk about the Form S3 and Form S8 that you may have seen filed today after market close. We amended the existing S3 with the filing of a new S3. As you'll recall, we consummated a private placement of common stock to 𝗖𝗢𝗡𝗡𝗖𝗧 for aggregate proceeds of $915 million in December 2022. In connection with this private placement, we agreed to register the shares with the SEC. The Form S3 is intended to register these shares by amending the existing Form S3 that we filed in August 2022. This action was to fulfill our contractual obligations regarding registration rights and is not a new issuance. We also filed a Form S8. As a reminder, the Form S8 is primarily to register the additional shares made available under the company's second amended and restated 2021 stock incentive plan, which was approved by the stockholders at the 2023 annual meeting on April 24th. Moving to the business. As Peter mentioned, in Q1, we made the very difficult decision to streamline our workforce to better position the company for the future. We took a $22.5 million restructuring charge, which was at the lower end of the $22 to $28 million we indicated in late March, given that we were able to reallocate certain employees to other critical positions within the company. We anticipate the final part of this restructuring action, approximately $2 million, to occur in the second quarter. Now turning to our 2023 first quarter financial results. We produced 2,314 vehicles, up 225% year over year, and delivered 1,406 vehicles, up approximately 291% year over year, making Q1 2023 our second highest performing quarter in terms of production and delivery volumes, though its performance was less than Q4 2022. As we guided last quarter, we expected Q1 to be down significantly versus Q4 2022, while we work to drive up qualified awareness of our world-class products and also work to unlock production of Stealth, the European, and the Middle East variants. As Peter mentioned, we've now resolved some of those gating items and are focused on ramping these three areas further in Q2. For Q1, we recorded revenue of $149.4 million, which represented a year-over-year increase of 159%. Cost of revenue was $500.5 million for the first quarter. Our gross margin was down on a quarter-over-quarter basis. This reduction was driven by lower volumes, which we signaled would be down in our Q4 earnings call in February. As part of that $500.5 million in cost of revenue, we recorded impairment charges of approximately $227 million in Q1 related to lower of cost or net realizable value, which we also refer to as LCNRV, obsolescence, and losses from firm purchase commitments. Now, moving to operating expenses. R&D expense totaled approximately $229.8 million, up 3.8% sequentially, due in part to Gravity testing and tooling. Peter spoke about Gravity, and we're very excited that road testing has already begun. This increase was partially offset by the execution of cost initiatives to reduce outside services as well as freight. SG&A expense was approximately $168.8 million, down 1.2% sequentially. The sequential decrease was primarily due to lower base stock compensation and IT expenses. While we are intently focused on optimizing costs, which I will talk about in a moment, it's equally important to note that we are continuing to invest behind our strategic and growth priorities, including sales and service, customer care, and the build-out of international offices and infrastructure. To that end, in the first quarter, we're excited to have opened 5 new studios and service centers. 3 are international sites, with 1 each in Montreal, Toronto, and Oslo, Norway, and 2 are in the U.S., with 1 in the Washington, D.C. area and the second in the San Francisco Bay Area. This brought our total at the end of the quarter to 40. We'll continue to be strategic and judicious with our site expansion and are utilizing cost-effective pop-up studios with great effect to complement our studios for brand awareness. On the service side, we ended Q1 with 38 mobile vans in the fleet and 73 nationwide approved body shops to ensure high customer satisfaction as the fleet of Lucid vehicles continues to grow. Our stock-based compensation in the quarter was $55.3 million. We also recorded a non-cash expense of $40.8 million related to the change in fair value of our common stock warrant liability. As a reminder, this non-cash impact can be influenced quarter to quarter by a number of factors, with one of the larger factors being Lucid's share price at the end of the quarter. In Q1, we achieved an adjusted EBITDA loss of $643.9 million. Now moving to the balance sheet. We ended the quarter with just over $3.4 billion in cash equivalents, and investments, with total liquidity of approximately $4.1 billion. We're very proud of our ability to consistently sustain a strong balance sheet over time. We've been able to access a variety of funding options, from the $2 billion green convertible bond offering at the end of 2021 to the $1.5 billion ATM in private placement at the end of 2022, alongside government support in Saudi Arabia and the large $1 billion ABL facility we put in place with a world-class banking syndicate. We'll continue to take a holistic and opportunistic approach toward funding the business, and we continue to believe that we have access to various options in debt and equity markets, as well as access to low-cost government programs. Turning to inventory. Inventory increased sequentially due to the pace of our production volume ramp versus delivery in the quarter, raw materials associated with new vehicle variants that we are now producing, and a higher volume of in-transit inventory as we move the remainder of the components which are eligible for ocean transport to sea. Over the balance of the year, we expect a significant reduction in raw material days of inventory on hand. As supply chain pressures ease somewhat, we obtain more predictability in the transportation channels, and we refine our inventory management processes and systems. Capital expenditures were $242 million in Q1. Now moving to the outlook. We are on track to produce over 10,000 vehicles in 2023, with company-wide initiatives ongoing that will enable Lucid to pivot to higher volumes as market conditions allow. While we typically don't provide delivery guidance, we wanted to provide some directional color to help you with your modeling. For Q2, we are targeting deliveries to be up sequentially. we now have Pures in all U.S. showrooms for test drives, and we have a broader set of buildable configurations available, though it is important to note that we are still scaling those programs, and we're continuing to work on our sales and qualified awareness initiatives. We expect that Q3 production and delivery numbers will ultimately be determined by how fast we are able to ramp the Pure buildable configurations. And as for Q4, we are expecting that to be our largest quarter of the year. While I would again caution that there are many controllable and uncontrollable variables that can affect gross margin, I want to provide some context on our expectation for the direction of gross margin this year. In the second quarter, we expect improvement on higher sequential volume. We also expect to realize improvements throughout the year as a result of our cost efficiency and cost optimization efforts. Specifically, our workforce restructuring in the first quarter is expected to result in annualized cost savings of approximately $91 million, geared towards cost of revenue, with the balance of the annual savings attributed to OpEx. You will start to see the full impact of this savings in Q2, less the approximately $2 million restructuring charge that we mentioned above, which will hit in Q2. Second, we've been working a number of bill of material cost reduction efforts. We're expecting to see a cost savings by the end of the year, not necessarily throughout the year, with more reductions already identified for 2024. Third, we have restructured a number of our freight contracts, and we believe that we'll continue to see improvements in this area over time. Lastly, we're working diligently to reduce the days outstanding of our raw material inventory. Over the past 18 months, we have held additional inventory due to concerns on part availability and logistics slowdowns, and in some cases, banking of parts due to tooling capacity planning. However, this excess inventory has significant storage costs, reduces our ability to benefit from commodity price reductions that are now occurring, and also increases risk for obsolescence as some parts expire or are updated due to engineering changes. We believe that there is significant savings as we unwind some of this excess inventory and simultaneously refine our tracking and inventory systems. These actions will both reduce our working capital and our cost of revenue. Other gross margin tailwinds include the opportunity from the Inflation Reduction Act, which we think could contribute as much as a couple $1,000s per vehicle, and the regulatory environment is also getting more stringent, and we see opportunity on the emission credit side around the world. Recall, we signed our first emission credit deal in Q4 of 2022. Regarding our liquidity position, we ended the quarter with approximately $4.1 billion in total liquidity, which we believe provides sufficient capital at least into the second quarter of 2024. Moving to CapEx, we expect capital expenditures for 2023 to be between $1.4 and $1.6 billion, reflecting some efficiencies which were identified over the last quarter and deferrals in our capital outlay. CapEx will support our continued growth objectives as we strategically invest in manufacturing capacity and capabilities, our retail studios and service center capabilities across the globe, and development of different products and technologies, and other areas supporting growth of Lucid's business. Phase 2 of the factory build-out in Arizona is progressing, and we believe will benefit from a number of cost efficiencies, including moving logistics more fully on site and later bringing stamping in-house. We're also looking at bringing Phase 2 online in stages on a shop-by-shop basis, which we expect will allow us to defer some capital expenditures and associated depreciation expense until 2024 without a delay in the estimated Gravity timing. With regard to our manufacturing progress in the Middle East, the first semi-knockdown, also referred to as SKD facility in Saudi Arabia, with capacity of up to 5,000 units, is nearly complete, and equipment installation will begin next month. We had a ribbon cutting for our SKD building in Casa Grande, Arizona, trained up staff that came over from the Middle East, and we expect to be operational in Saudi Arabia in Q3. This is very exciting and exactly where we want to be. In closing, I want to express my gratitude to the entire Lucid team, as well as our investors, partners, suppliers, and customers. With your support and commitment, we are several steps closer to realizing an environmentally sustainable future. With that, let me turn it back to Maynard to get your questions. Maynard.
Thanks, Sherry. We'll now start the Q&A portion of the call. We'll start by taking Q&A from our retail investors through the Say platform, very important constituency of our shareholder base, followed by live analyst questions. So our first retail question is, Peter, you've said, I'd just like to underpromise and like to overdeliver. You promised 20,000 deliveries in 2022 and 49,000 in 2023. We got 4,000 in 22, and guidance is just 10 to 14 for 23. When will we see underpromising and over-delivering? It has been the complete opposite so far.
Thank you, Maynard. I'd just like to start by saying to everyone, I acknowledge and empathize with the frustration, and I take this very seriously. Under-promising and over-delivering isn't about setting low standards or being complacent. It's about being realistic and proactive, and then going above and beyond to try to exceed expectations. And we as a management team, we take this very, very seriously. Back in 21, hardly anyone could have foreseen the disruption to the logistics and supply chain that we saw in 2022 that affected the whole industry. It wasn't just Lucid. It was a bunch of other car companies, very established names, were affected the same way. I was part of a team that worked night and day in that factory to resolve issues throughout 22, and as a huge team effort, we did that. And now we're facing challenges in the market, macroeconomic effects, and high interest rates, which do impact. We've seen the withdrawal of the federal tax incentive at the end of 2022. And these are factors which are very difficult to predict. When we guide, we do so with absolute honesty and integrity to the very best that we are able to estimate. And I totally empathize with our shareholders who are here with us through the long run. But I nevertheless believe that this is a technology race, that the technology that we've developed is unique, it's hugely differentiating, it will enable us to push the price of cars down because we've got more efficiency, which means we can go further with less battery energy, which means we can go the same distance as anyone else with smaller batteries, and batteries are the high cost item, which gives us an advantage in terms of potential gross margin. And I believe this will come to bear in the future. And we've also got compelling products coming. We've got Sapphire, which is going to be a halo product for the brand and help grow brand awareness. As we know that is a limiting factor right now. And then we've got the big one for production coming next year and on track, the Gravity, which I think is going to be a seminal product. So I temper this with unerring optimism for the future for Lucid.
Thanks, Peter. The second question is, would you consider launching the Gravity with a more price-accessible trims first to attract more buyers considering the current economy conditions?
Yeah, firstly, I would say that from a principal perspective and given where we are in the life cycle maturity of our company, we do think it's important to balance between volume and price and not to optimize one to the detriment of the other. Your question is timely because we have been studying this topic, looking at launch cadence, the time between launches, and the price elasticity curves and where the intersection of those end up optimizing for the company. It's still a little bit early for us to comment on our intended approach, but what I can say is that we've already sourced about 80% of the components on the Gravity. It's going really well, and we've been able to stay within our cost targets, which will ultimately give us maximum flexibility to react to dynamic market conditions over time. We're also taking lessons learned from the Air and looking how we shrink the amount of time between trim launches, hence getting all buildable configurations into all regions out to the public faster. And finally, we know it's important that customers are aware of the full price spectrum for the vehicle. We found that a lot of people simply don't know that we offer, in the case of an Air, a vehicle with a starting price of $87,000, as Peter mentioned a few moments ago, and hence awareness is something that we continue to focus on. So we'll keep you posted as we can share more, perhaps at the Gravity Unveil later this year and in 2024 as we approach start of production.
Thanks. Tawanda, can we turn it over to phone questions, please?
Sure. Ladies and gentlemen, as a reminder to ask the question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by for our first question. Our first question comes from the line of Chris Pierce with Needham & Company. Your line is open.
Hey, good afternoon. Just a clarification. Did I hear you right that test drives are up 2x in 1Q23 versus the fourth quarter of last year? And if that is the case, I was just curious what was driving that given the Dream Ahead tour launched in the second quarter, I believe.
That is correct. It's been a whole holistic series of activities that we've initiated, which collectively will form the basis for our forthcoming marketing strategy. It's not just been the Dream Ahead tour. That's garnering a lot of test drives, but we've been much more proactive, both at studio level through initiatives that we've undertaken from headquarters here to get more people in the car. People are blown away by the sportiness, the driver engagement, the refinement, the comfort of driving a Lucid Air. People who have never driven EVs before are attracted to this. So it's all about getting people behind the wheel to experience. Very few people will actually buy a car without experiencing a test drive. So I see this as a conduit, a sort of gateway to a future purchase and ownership experience.
Okay, and then just lastly for me, with the cars available on the website right now, cars you have in inventory, is there something you're doing to kind of that coincides with the test drives or the Dream Ahead to kind of work through that inventory, or is it just about whatever specifications or configurations a customer wants, you'll build that, based on whatever they order? I just kind of want to get a sense of, I know you're not preferencing time or price, but how you're kind of thinking about, those two dynamics.
Well, we're reconfiguring the website to make the customer experience more seamless, more straightforward. We're showing the cars that we have currently available that can be spec'd on that website. And of course, we're building to order. We've recently introduced the stealth, the dark side look of the Lucid Air, and that's really attracting a very different audience. There's a very different vibe, a more youthful appearance to that car, and it's a very handsome manifestation of the range. So we're doing all those things. We've got increasing volumes of touring out there. We've got tourings in the studio to experience, and test drives are undergoing. And of course, we're bringing more and more affordable versions of Air Pure, the Air Pure coming out. And later this year, we'll be bringing the rear-wheel drive variant of the Air Pure out. Remember that although many people believe that a Lucid Air is a $200,000 car, it actually starts at $87,400, and we need to really dispel this myth.
Thank you. Please stand by for our next question. Our next question comes from the line of John Murphy with Bank of America. Your line is open.
Good afternoon, guys. Peter, in your comments, it sounded like you were alluding to potentially licensing or selling the powertrain technology, and it sounded like that was actually, pretty far along potentially with some customers. I'm just curious if you can comment on that or give us any other color as to what those comments meant.
No, John, I'm not in a position to disclose anything tangible at this juncture, as I said earlier. But we continue to receive incoming interest, and I think there's a growing awareness that we have something very, very special here in terms of performance and efficiency. And if you can have something more efficient, you carry less batteries, so you're burdened with less battery weight, and this makes the car really more agile and more sporty and more a driver-focused experience. So the technology we have today is eminently suitable for higher performance vehicles with our drive units of 600 to 670 horsepower capability. When we develop lower power units, more affordable units for a mid-sized platform in a few years' time, it's then that technology would be, more appropriate for a more mainstream manufacturers. We've not proactively gone out to seek any engagement in this arena, but we've had multiple OEMs come speak to us, and we are in dialogue with several right now. And that's all I really can disclose at this juncture.
Okay, and then Sherry, maybe just two quick financials questions for you. The $411 million of finished goods inventory would indicate there's almost 4,000 units, in stock. Is that, about right, or is there something else in that finished goods inventory that would be considered that wouldn't be a completed vehicle?
Yeah, that is a little bit misleading, so I'm glad you asked the question, John. The finished goods inventory has the inventory that is available for sale, but it also includes our test fleet vehicles, loaner vehicles that we have in order to give optimal customer care experiences, for the end customer, showroom cars as well. These are vehicles that ultimately, after a few thousand miles on them, or perhaps no miles on them in the case of showroom cars or media cars, that we will ultimately sell, but they're not available for sale today. So it's important to differentiate between available for sale today and finished good inventory that is being used for other customer-facing purposes.
Okay, and then just the other financial question. I mean, there's a lot going on right now, so I haven't had a chance to completely go through that S3. But it sure looks like a mixed shelf. I mean, is there the availability for you to raise material amounts of capital under that shelf that's been filed? Or I mean, I'm sorry, once again, I haven't gone through the details there, but it looks at first blush like there's a lot of room for you to raise capital.
Well, again, this is not a new issuance. This was really just a contractual obligation that was associated with the subscription agreement that we did with the PIF back in December of 2022.
Okay, great. Thank you very much, guys.
Okay.
Thank you, John.
Thank you. Please stand by for our next question. Our next question comes from the line of Andrea Shepherd with Cantor Fitzgerald. Your line is open.
Hi, good afternoon, everyone. Congrats on the quarter, and thanks for taking our questions. Peter, I wanted to perhaps follow up from the one of the last questions in terms of the licensing. I realize you're not providing additional color on that. I'm seeing if maybe I can ask the question slightly differently. Given the slight reduction in the production guidance for this year and gross margins where they are, I guess, what is the reluctancy to introduce this as a new revenue stream? You have the proof of concept with the Formula E series. You've continue to talk about the technology and how superior it is relative to competitors. So I'm just trying to understand, why not introduce this sooner rather than later? Thank you.
There's no reluctance on our part. We're very open and engaged. We have to prioritize here. Last year, my laser focus was working crazy hours in the factory. That's what I was doing, crazy hours to resolve logistics and supply chain issues. My laser focus right now is amplifying for brand awareness and creating a cohesive strategy with Andrea to market this brand and make many more people aware that we've got the best car on the planet. Our tech roadmap, I believe, is extraordinary. We will be launching progressively more affordable versions of our tech, which would be appropriate for OEs in different parts, strata of the market. So there's nothing tangible to announce right now. We are in dialogue with third parties, and I will make an appropriate announcement should that bear fruit. But there's no reluctance on our part. We're open and receptive, but I really have to focus on our products right now rather than proactively chasing licensing.
Got it. Okay, understood. Thanks, Peter. And maybe as a quick follow-up, was wondering if you can perhaps just give us any color on the deliveries starting to Saudi Arabia, as part of the major agreements. There was a brief comment there from Sherry at the end. Sorry if I missed it. Just wondering maybe you can elaborate a bit further, just in terms of how you see those progressing. Yeah, thanks.
Yeah, so I think you're referring to the Ministry of Finance agreement that we have, in which they have committed up to 50,000, maybe up to a total, with the option for another 50,000, up to a total of 100,000 units over the next 10 years. We are progressing those conversations. We are in active dialogues. We're in the process of building out the specs for the first vehicles that they want to receive later this year. So that is actively ongoing.
Okay, thanks, guys. Congrats again. I'll pass it on. Thank you.
Thank you.
Thank you.
Thank you. Please stand by for our next question. Our next question comes from the line of Steven Fox with Fox Advisory. The line is open.
Hi, good afternoon. Two questions, if I could. First of all, the change in guidance in terms of going from 10 to 14,000 to 10,000. How much of that would you say is related to just some concerns on the macro or your ability to build brand versus just factory production issues? Any details you can provide on that? And then I have a follow-up.
Yeah, I think it's important as we take a very responsible perspective of this, that we match the cars that we build, the production volumes, with the cars that we deliver, and that's the balancing act. Certainly we believe that the macroeconomics are playing a part in the deliveries right now. We also believe that the interest rates play a part, even for a high-end product. Even in this part of the market, interest rates do provide a headwind. But we've got initiatives within the company to turn the faucets on to up the volumes should those market conditions improve. And, that we're ready to scale up pending that. So, and also, as we amplify brand awareness. And also, I come back to this misconception, which seems to be out there, that, yes, people believe it's a $200,000 car, and it's actually the entry-level price is $87,400. It's probably conceivable that people think of it as a $200,000 car because it's so amazing. But actually, it's much more attainable, and we need to spread that word as well.
Great, that's helpful. And then just in terms of, you mentioned maybe bringing phase 2 online in stages. Can you just talk to sort of the triggering point for that, and whether, I don't know whether if you focus on certain stages besides the CapEx efficiencies, it helps in any other ways, or in terms of how the vehicle production goes from a cost standpoint and your ability to react to changes in demand. Thank you.
Yeah, no, I think it's an important question. So we're in the process of adding significant, I think 2.85 million additional square feet in the Arizona Casa Grande facilities, and it's a number of our shops are being either expanded or new buildings. And what we're finding is that as we look at our production plans, that we have the ability to continue to eke out a bit more volume out of some of our existing machinery, tooling, equipment in the existing shops for a bit longer, which would allow us to take certain of the shops, like stamping, perhaps paint, and potentially delay the onboarding of those. Hence, you will delay the depreciation expense that accompanies that particular machinery, tooling, equipment, and facility to a little bit longer. The other thing we're doing is we're really carefully looking at all of the equipment that's going in each of these shops, and to the extent that there is volume equipment that could potentially be delayed, like the addition of additional robots, for instance, we're looking to put those in place and activate those as they're needed versus doing it all at one time. The other thing that's really unique about what we're doing in the general assembly hall is that we're going to have the ability to dial up the jobs per hour between a few different job per hour points. So it's not a unit step increase in the direct labor and bringing on the equipment, but instead we'll have the ability to dial that up gradually. And we're going to work to be really thoughtful about that so we can minimize depreciation expense and also the just efficiency of the workforce as well.
Great. That's all very helpful. Appreciate the answers. Thank you.
Thank you. Please stand by for our next question. Our next question comes from the line of Doug Dutton with Evercore. Your line is open.
Thank you. Hi, Peter, Sherry, and team. So, looking at ASPs, they were about $106,000 per vehicle this quarter. So that either implies some heavy discounting, below MSRP or a lot of pure trim. Can you maybe speak a little more to that and how we can think about that going forward?
Yeah, so I think that when you think about the mix as it starts to differ from 2022, you're starting to have more dominance in trims other than Grand Touring and Dream, right? So now you start having more prevalence of Touring. We're starting to get Pures in there. But as you go forward through the balance of this year, there is going to continue to be healthy mix because some of the higher trim levels are going to start going and are going to the Middle East and Europe. And so you're going to start to see the exposure of those products, those higher end products in those regions while you simultaneously start to ramp Pure in the U.S. and then later send that overseas as you're exiting the year and into 2024. So you're going to continue to see this mix of trims. We did have a 7,500 kind of continuation program that lasted the first couple months of the year, few months of the year, and that also is reflected in the revenue numbers that you do see.
Okay, and it's safe to say that $7,500 continuation program will come off going forward throughout 23.
It did come off, yes.
Yes, okay. And then just one quick modeling question for you, Sherry, on the LCNRV cadence. Is there any sort of guide on how we might see those charges hit in the remainder of this year and the next, just so that we can, lay it out cleanly in the model and understand, how those might affect the bottom line?
Yeah, no, it's a great question. The LCNRV charges have been really kind of between $180 million, $200-ish million, $220 million the last 3 quarters. So we've kind of seen it basically leveling off. We do expect to see an improvement of that over time because part of the charge is associated with the inventory we have on hand. Given my comments that we're looking to reduce the days outstanding of inventory on hand and not bringing fresh inventory in terms of raw material, and also work in process, finished goods, we would expect that to start to taper down. So as you're looking forward this year, we are expecting some reduction in that over time. The other thing that we have had in some impairments there is we had mentioned some obsolescence, we had mentioned some scrap. I had mentioned the fact that we have some different activities ongoing to really address that in a more proactive way. And that's partly us improving our systems. It's partly us not having to hold as much inventory on a precautionary basis because we're not experiencing the same supply chain issues and the same COVID issues that we had in the past. So bringing down that inventory, making sure it's more current inventory will also improve the situation throughout the year.
Understood. Thank you for the detailed answer.
Of course.
Thank you. Please stand by for our next question. Our next question comes from the line of 𝗖𝗢𝗡𝗖𝗧 with Redburn. Your line is open.
Hi, thanks for taking my question. If we exclude the non-cash inventory write-down charge, your COGS per unit only improved by about 8% versus the fourth quarter of 2022, which likely reflects the rotation towards the lower content Pure and Touring variants, but also some of the discounts that you just mentioned. Are you able to provide some data points for analysts and investors on the work that's being done internally to remove the costs from the vehicle?
Yeah, absolutely. I mentioned a few of them in my prepared remarks, but let me provide some additional context. So some of the work that's being done is on bill of material cost down. Now, that has two different flavors. One part is commercial agreements that we have with our suppliers in improving piece price costs. Some of that happens, as you're negotiating additional volume with them on new programs, they become more open to negotiating down piece price on current programs. So that's part of the effect. The other effect is when we are doing engineering changes that have a corresponding cost increase as well. So BOM cost is certainly something that we are expecting to see throughout the year, though you have to remember when you've got inventory on hand and you're bringing new lower cost parts in, you got to go through that inventory first. That's why I guided earlier that you're going to start to see the impact of that more towards the end of the year and also as you get into 2024, because some of these items we know will actually take effect in 2024. Some of the other areas where we've been seeing some really good progress has been in freight, and that'll start to show up more in Q2 and Q3 as we've renegotiated some of our contracts there. And also we're seeing improvements in manufacturing overhead as well. And then as a result of the workforce reduction, there's improvements that you're going to start seeing. More of it's going to be in cost of revenues than in OpEx, and you're going to start seeing that in Q2. So these are different cost down initiatives that will start flowing through the gross margin. Then, of course, we talked about the greenhouse gas credits, the Inflation Reduction Act, some of those things, some of the trims that we have, those will start hitting a little bit later in the year is our expectation.
Okay, cool. Thank you. And I guess my second question is that the Lucid Air began production roughly 1 year after beta prototyping testing began. And clearly COVID impacted some of the start of production timeline. But shouldn't analysts and investors use the same timeline to conclude that the Gravity SUV begins production in roughly 9 to 12 months from now, given your announcement that this nameplate has just begun road testing?
All I can say is that we've got to get the product absolutely right. There is a gestation period between beta and start of production. There's also a nomenclature issue here. We're on target for start of production late 24 for the Gravity.
Okay, cool. Well, perhaps maybe you outline exactly what needs to happen for the between now and the start of production, maybe so that we can track it in real time. I don't know when you expect the vehicle to get homologated, et cetera, et cetera.
Yeah. Well, I mean, homologation comes relatively late because that has to be conducted to process and tooling represented levels of authenticity that represent production. So right now we're road testing the beta vehicles for the core attributes, structural integrity, drivability, suspension tuning. We're starting on some of the brake development, the traction control, the anti-lock braking systems, the core attributes of the vehicle. Then we will move to a phase of interior development. They won't have representative interiors at this stage. Later this year we'll move to betas with representative interiors. We can do all that development. Then the long lead tooling items are being kicked off because some of the parts take over a year to tool. And then we'll go through a pre-production run through next spring, culminating in production late 2024 on track. And I believe it will be a seminal product. Gravity is on track. It's the big one. It's going to be a landmark. 7-seater, third row, 3-row, super practical, super high performance, extraordinary range, extraordinary performance attributes.
Great. This has been super helpful. Thank you. I'll pass the line on.
Thank you. Please stand by for our next question. Our next question comes from the line of 𝗪𝗠𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗙.
Good evening, and thanks for taking my questions. Peter, just wanted to get your thoughts on kind of competitive dynamics in the market right now. From our vantage point, it feels like a pretty challenging market for luxury electric vehicles, but wanted to get your view on if price cuts from one of your large domestic competitors on their luxury line of vehicles is having any impact on demand for Lucid vehicles.
Well, I think what you're referring to is perhaps a different part of the market. I believe that there is a challenge to the entire market right now because of macroeconomics and because of interest rates, which actually do affect this place of the market. We're seeing key competitors from Germany discounting their products very heavily. That's not just the US manufacturer that you may be referencing. The Germans are heavily discounting their vehicles, and I think there are challenges right across the marketplace. I think what we need to do is just amplify awareness, just how compelling our product is. We've got better range, we've got better interior comfort, we've got more legroom, we're faster charging, we're more efficient, we're higher technology. We've got a fundamentally superior driver engagement experience. I was taking some potential customers for a test drive just yesterday, and they were just blown away by the overall driving and riding experience. And we just need to get more people behind the wheel. That's what this is about. We don't have 100-year heritage or history. We don't have an existing customer base. We need to win new advocates, new customers.
That's super helpful, and it's good to hear you're out in the field kind of promoting the product.
Personally, most weekends I'm out meeting customers at events, and the grassroots evangelism is growing. And this doesn't happen overnight. This will take some time. We are planting acorns for a forest to come in the future. Make no mistake.
Makes perfect sense. I guess just you gave the data points around test drives and the number of cities you're going to for the Dream Ahead tour. Is there anything commentary you can provide on kind of the cadence for order trends since that started, or is it too early?
It's too early to do that, and there are so many factors that overlay. It's very dangerous. But what I would say is this: that we've more than doubled the number of test drives in the last quarter, and I believe that very few people would buy a car without test driving. I see that as a key stepping stone, a key conduit, a very relevant metric, and that is a step towards purchasing ownership. And then what we see is the best salespeople we've got are our customers that become advocates, and some of them even evangelize for us. And there's something very genuine about that.
Yeah, these test drives also give us personal touch points in order to enter into dialogue with the customers, better understanding their needs. And then it also, I would say that as we've stood up the Lucid Financial Services business in the U.S. and then growing that overseas, that's another touch point where we can gain intelligence on what the customer needs, the pricing that they're looking for, the interest rates that they're looking for. And all of these are going to be data points that we can use to refine offerings that are going to best meet the customer needs.
And we're streamlining the whole customer experience, making the website much more intelligible, more intuitive, more user-friendly, streamlining the ordering process online.
That's super helpful. And just last quick question for me, kind of Gravity, any learnings from the Air launch process over the last 12 to 18 months that'll help inform the Gravity launch, call it 12 months from now?
Oh yes, of course. I mean, we want to continuously improve, and there's a continuous improvement and learning process, which we take very seriously. The teams here, the engineering team, Gravity works very closely with production team, design for process, design for manufacture, and this is a really collaborative a team sport, which we take very seriously. I really believe Gravity is going to be a seminal product. I don't think there's going to be anything out there that's even close. It's taken all the technology that we've developed to date and more that we're going to throw at this car, because the problem with SUVs is getting range without an unduly large battery, which becomes super heavy, and then you lose payload capacity on the car. So this is a multi-dimensional, hugely technical challenge, and it's only now, I believe, that we're ready to really give it our best shot. Gravity is going to be huge for us. I'm very excited about it.
That's very helpful color. Thanks, Peter, Sherry, and team. I'll hop back in the queue.
Thank you. Ladies and gentlemen, due to the interest of time, I would now like to turn the call back to Maynard for closing remarks.
This concludes Lucid's first quarter 2023 earnings conference call. Thank you all for joining us today, and you may now disconnect.
Well, not all bad, some bad. So highlights: Gravity. Peter's laser focused. I'm gonna get rid of this music for a second. So yeah, Peter's laser focused. Gravity. They kind of didn't really hint it, but the fact that they didn't confirm at least it's going to be 12 months from now, it is fair to assume that it is going to be most likely end of Q3, end of Q4, or in Q4 for 2024 for start of production. So of course Q1 most likely for deliveries. Barry did bring up a good point. I wrote that down on my Word document. So even though technically the amount of test drives that increased, like I get their viewpoint, the fact that like usually people test drive a vehicle before buying it, but usually if they like it from test driving it, they commit within, I'd say, 24 hours. So the fact that they didn't really, like for instance, every vehicle I've test drove ever, I've bought it usually within 24 hours. So I get Lucid is a different ball game, higher prices, and even though it's a $200,000 vehicle, being sold for $87,000 and change. But yeah, they're burning through more cash right now, but clearly they do have a lot more liquidity, as what they did say, which kind of does signal. I still need to look at, for instance, this amended S3 that they did put through. So they said the only difference between this is supposedly what the PIF purchased, which was $915 million. That was in December 15th, I believe. So the PIF increased their position that amount, and yeah. There is some other points to bring up. So they kind of highlighted, I'm all over the place as far as my notes. So they did confirm Saudi Arabia. So maybe Saudi Arabia might in general be more productive than the AMP1 facility eventually, because they said 5,000 is estimated for the AMP facility starting in September, but that's obviously an annual rate. Inventory is a potential problem, and they tried to spin it. I can't remember which analyst it was. They did hold them down and said like, well, what do you mean? What do you mean? And that's one of my biggest problems. A lot of the analysts, when they've gotten the bad answers from usually Peter, they just like, okay, sure. But I can't remember who it was. I think it was Cantor Fitzgerald. They went at it. So yeah, there is truly, they couldn't define exactly the true amount, but there is a demand, and this is why there is around 4,000 vehicles that is currently in inventory. Of course, some of that is destined for not deliveries. Some of that is for, I guess, being sold, I guess, on that the website. They haven't really changed, even though they got rid of my friend Jeff Curry. He doesn't seem like they've really done too much for their marketing. So it was very I was hoping they were going to answer this question. Even if they don't acknowledge the demand, I wanted more so what's their marketing strategy and brand awareness. But Peter's main focus it seems to be the test drives, which I guess we'll find out eventually, I guess in Q2, looking at their numbers, because with the tour kicking off, if like demand has not increased, which might be hard because they don't really tell us reservation numbers anymore, but if that doesn't go up, then clearly we know Peter kind of not lied, but yeah. I don't know. I still think Sammy for CEO. Definitely Lucid is encountering a lot of problems still, it seems like. One thing that stood out to me was in Q1, stock-based compensation was $53 million. That's relatively high. 73 nationwide body shops. So that's one thing that's at least pretty good. Sapphires for summer. So that I don't really anticipate much coming from that anyways. That's more of a what they said, a halo car. Holy crap, I can't even talk. But later this year, they did say this is when they will be booking the reservations. So I guess truly this was a true teaser what Lucid did as far as that whole PR that came out. When was it? Right here. So as far as PR, the Gravity, which was a couple. So Stealth, they said, is going. Oh yeah, that's something that they did bring up. So Q4, they did bring up how there was bottleneck issues, or I guess supply chain issues. That's what they later called it on the Stealth, and also the Pure. So on the Stealth, they did say, in fact, that that's been resolved. So they started to do that last month, they said. So that'll be Q2 going onward. But the Pure, though, they didn't. Every studio has a Pure, but they don't have fully all locked down. And one thing that also another concern that brought up, if in Q4 they did bring up that roughly they booked and confirmed about 80% of all the Gravity. Well, Sherry did say the exact same number. She said 80% this year as well. So they haven't really, whatever 20% outstanding on the Gravity, they have not confirmed any manufacturing agreements to kind of work on that. But generally speaking, like I said, I still do strongly feel that this is most likely the last true bad earnings. Based on what they said, it might indicate the Q2 might be a little bit iffy. But you know what? I'm not too concerned. Or am I crazy? What do you guys think? I'll take a look. Normal guy's perspective. Yes, that is, you kind of summarize that. They are losing money still. Yeah, let's go Lucid. 5,000 to Saudi next month. Bill, that is true, yeah. Sapphire will get a lot of good PR. Hopefully, that's all it needs. I did a video and people said that they didn't have the money to do that. One thing that pissed me off is it wouldn't really cost much. During the World Cup, they could have easily just set up stations outside of each, I don't know, even a handful of stadiums, and just whatever, had the Lucid Air just right there, not even done test drives, just have it right there. People would be all over the vehicle. But supposedly I got hate when I put that out and whatever. I saw there was this tweet that came out last month saying that they did the same thing at the New York Square or whatever, downtown New York. And I'm like, well, how can you do that? What, like, you really realistically think that people are going to value that more than, for instance, at the World Cup when it's in Qatar, huge oil money there, right next to your damn biggest like investor? Like, that makes, I don't know. That is, but on a positive note, my friend Jeff Curry is gone there. SCJ, you know what? In all fairness, for those of you that have been invested in Lucid for quite some time and you've lived throughout this all crappy time period of it going down, it potentially going to maybe $6 and change because of whatever pushing back or whatever it is. Like, you've pretty much lived through the worst part of it. There's one, maybe two more hurdles left before they actually start to get their stuff together. So I know you kind of might not necessarily like the earnings and get discouraged, but I wouldn't jump to selling straight away. My own opinion, of course. But of course, you guys all do your own due diligence. If you guys are concerned, then yeah, you can always definitely sell. But how I see it, like, from this price going forward, as far as the potential upside versus downside, like the risk versus reward, like, it's definitely there. So I don't see any that much downside given these prices. So, but it technically, on a positive note, as I said, one very big point to watch for is 696, and it is holding with all the crappy laser focus that Peter has shared with us, that gravity obviously deliveries maybe Q1 2025 or whatever it might be, which is probably why, going back to these questions, so they did only answer 2 questions. So this one they answered this one as far as the other accessories or the trims for the gravity. They didn't touch on this, but I think that's probably because if the gravity, for instance, is Q1 2025, that wouldn't make logical sense about having a mid-size SUV by 2025. It just doesn't make sense. So most likely it is fair to assume that this has been pushed back. And even technically as well, they did say that it's midway through the decade, but in Q3 they did say it's more so near the tail end of the decade. So I don't know. That one would have been a good question. And same goes for this. I would have liked for them to talk on the marketing strategy and awareness, and just why is nobody talking about ESS? How is people not caring about that? Like, it just doesn't make sense to me. But you know what? Again, GDP, actually, GDP, that is a good question, or a good comment. Partnership. At the very beginning, even though it was very rehearsed as what Peter normally does say, he did bring up partnership, that they're humoring partnerships. So you never know. Well, unless he's talking about Panasonic maybe, or even Samsung, because I think there might be Let's Go Lucid shared something that there might be something with Samsung potentially down the line. Pete, if it does go to 650, I definitely will be loading. Regardless, I will be increasing if it's in the 6s, because in my opinion, if it breaks this S1, this is a good deal right now. So I get it if a company doesn't have liquidity, doesn't have backing, and it kind of breaks in this range, it usually is a cause for concern. But with Lucid and how they do have, for instance, that S3 that I'll review and kind of read it over a little bit, I think that they should be fairly backed. I don't agree with Sherry's initial news right here. I still don't agree with that at all. The fact that they have sufficient liquidity until the second quarter of 2024, I don't agree with that. Same thing as technically, they did say midway through 2023 they had sufficient funding, but I said that in Q3 or Q4, I think they were going to dilute, and turns out they did. Because whenever you need money, you're going to dilute not the month before. You're going to dilute at least a quarter and a half before. So still might be Q3 potentially, or Q4. We'll find out eventually. But like I said, price is holding. They didn't cancel the gravity, but I don't know. Maybe I'm just being too optimistic. Oh, Huggy Bear. Oh, you changed it. Change your name. yeah, normal guy's perspective, I think this is why people, ever since December, I've noticed that people have just like taken a chill pill with Lucid. And it is because of exactly that same thing. The fact that people know the PIF is going to back it. Like, no matter what happens, like, yeah, it'll have a couple more bumps. I can almost guarantee they are going to encounter a couple more issues going forward. But PIF is definitely going to back them. So, yeah. Huggy Bear, not necessarily. They are improving on that. Based on the technicals and so forth, everything kind of is still within range. So this earnings didn't cause that much damage. It did cause it to go down clearly, 8.82%, but still within not panic mode. Anthony, I'm too optimistic. The thing is, for instance, Q4, maybe I'm a little bit more reassured, because in the past, I'm sure you guys have saw me freak out. It's like, what on earth are you doing, Peter? Why do you not answer the damn question even though you're laser focused? But this one, maybe I just appreciated in Q4 the fact that they kind of signaled that, like, hey guys, Q1 is going to be garbage, just so you know. And maybe that's why I'm optimistic, because the fact that I actually do appreciate when any company is very transparent and gives us a heads up. Market clearly does not like gray, does not like kind of having to come up with our own conclusions, because usually when doing your own conclusions, you automatically think negative. But maybe I just like the fact that they gave a good outline. They did give a good outline kind of for the rest of the year as well. So they talked on, for instance, Q3 or 2, 3, and 4, Q4 being the largest for production. Q3, the wording that they used, I didn't necessarily like. They said Q3 production will be dependent on if they can set up the Pure for manufacturing. So this is why I put that comment in the chat saying that the Pure still has a supply chain issue. So it's going to be very interesting to see what they do. But still, yeah, maybe I am too optimistic, but if it hits the 6s, I'm going to increase my position. If we sell, the PF is happy to buy them at the current prices. Yep, you got it, Des. Yeah. Where did you see that, Tristan? The new pictures? Oh, you mean from that test drive? I don't think, did I see any pictures? I think it was just the front. Or was I wrong? Gravity. Yeah, so there's that picture. Yeah, maybe different PR. I don't know. The only one I saw was from this. Unless, oh yeah, I think there was some more on Twitter, I think. X Shades, I have about 801 account, and about, I did reduce it a little bit, but I have about 801, about 360 in the other, all of which is locked in for options, majority of which is around the 850 for this coming Friday. So it's going to expire worthless, which is good because that's exactly what I do. That's how I get some additional revenue. Yeah, Bill. Yeah, what I don't like, for instance, about Peter is what was that one question? Oh, about licensing. So they alluded to that they have amazing licensing, and one of the analysts said, well, if you have proven technology, why don't you license it out? Like, I feel like it's really mean to say, and I don't mean to knock Peter, but it kind of comes off as like an elderly person that just doesn't know how to answer. It gets so distracted, and like he started to talk on how, I think I made notes. I kind of found, he started to talk on how they have started to have production, that he's been working crazy hours. He mentioned crazy hours twice. He's been working crazy hours all the time. This is where he started to talk on his laser focus. His previous laser focus was production, getting that down pat. His now new laser focus is brand awareness. But midway through, I'm just like, what on earth are you talking about? They asked, why are you not licensing your damn technology? Why the hell are you talking about laser focus on brand awareness? Like, be laser focused on generating revenue, which includes licensing. But again, maybe that's a little bit more too mean. Maybe. Any updates on the Lawrence live stream? He wanted it during this time. Can you do it in, I'll say, 2 hours? We'll see. We'll see what he says. So maybe I'll hop on another live stream in a second. Fishing for you. So yeah, partnership with Samsung in Europe, STC in Saudi. Rumor Aston Mars is, yeah, Bill. I think that was December or January about the whole Aston Martin rumor, which it does make sense. It logically does make sense. Yeah. It's not, Shades is not about the amount, it's just the fact even one share is sufficient. Slide Dragon. Yeah, I don't know. It is kind of funny though, at least to make it a little bit lighten the mood, just laser focus. Laser focus. Like, yeah, that'd be fun. Funny if someone makes one of those memes about him. But you know what? Maybe, hopefully things will move in the right direction. Still showed, I was hoping for a little bit less red flags as a result of this, but still is some. Nothing wrong with that though. Oddly enough, so I went to Vancouver, saw the studio. I wasn't able to test drive it, so I can already tell the fact that they said, when they said in Q1 they really started to push test drives. I had the advisor email me, I think 2 times. He wanted me to go out and do that. And one thing I think why I was very discouraged is initially, unless you were an American YouTuber or someone, which I think you had to be fairly big, you weren't allowed to film while driving. They didn't allow you to. But now all of a sudden, as of when they said in Q1, I could technically record. So that's something that I'll definitely do. I'll go there. I think I'm planning a couple trips soon, but probably June, maybe July, go to Vancouver and take a test drive. And they did say every studio has a Pure, so I'd rather test drive the Pure, which is a more realistic model to kind of look at. And then yeah, I'll film it, post it. See you, Des. See you, Huggy, Sammy. Which EV startup has the best chances? Actually, funny enough, Jeff, that you mentioned that. One thing that I kind of disagreed and I shook my head at when Peters did say that every EV is encountering the same problems and did in 2022. That's not necessarily true, because Polestar hit their targets. Rivian came close. Tesla came very close. It's just Lucid didn't. So some inconsistencies, but as far as which EV startups have the best chances, Rivian earnings is tomorrow, so I'm going to be live streaming that as well. So if you guys are curious, whatever typically happens to Lucid, we'll piggyback and go to Rivian, vice versa. So for instance, if Rivian is a little bit more optimistic about their 2023, I feel that will positively help Lucid as well. But as far as the best EV startup right now, as much as I do like Mullen, they do have a hell of a lot of issues ahead of them to come up with, and they haven't even started production. I personally feel it would be Polestar right now, only because they have the infrastructure so far set up for that The only thing that they've lacked is the American aspect because of the higher US dollar, but Bill, good luck on Twitter, on the carnage. I appreciate you guys watching, and yeah, I think this is it for me. It's been about 2.5 hours, give or take. But yeah, if you guys like for instance, Rivian and then Polestar is early morning on Wednesday. I'm going to be live streaming both as well. So make sure you guys stay tuned for all of those. I appreciate you guys watching. Again, based on Lucid, I will be, if it does get to the 6s tomorrow, I will be increasing my position, but most likely I do anticipate it to hold this S1. But we'll find out. We'll see exactly what does happen tomorrow. But yeah, I appreciate you guys watching. Thanks for staying tuned. And let's all make a lot of money eventually on Lucid.